Okay, Paul Simon was definitely right that the best way to feel groovy is to slow down, not move too fast. Got to make the morning last. But when rates are feeling this groovy like they are now, I would say that advice goes out the window. It's pretty much the opposite. You might want to speed up and strike while the iron's hot, because this is an amazing opportunity as rates on a 30-year fixed with good credit have fallen down into the levels of the mid threes, which is really historically low levels, right near the all-time low ever. And so that there's just tremendous opportunity there. If you're an existing homeowner, there's great ways to save money there. If you are a renter and you're considering buying, this is one of those times that might allow you to afford a lot more than you might otherwise be able to. So what's going on? Why is this happening? Well, there's a lot of words being written about the so-called inverted yield curve, and basically that just refers to the fact that the 10-year Treasury bond is actually its yield is lower than the 2-year Treasury bond, and that's so unusual because generally longer-term investments will generate those higher returns. The only exception to that is when there are concerns about recession. And so investors, they call it a flight to safety. They would rather have a place to stow their money, which they know is safe, even if it's got a lower return than even some short-term investments. So that's what's going on and why there is that so-called inverted yield curve. And that's really the same phenomena, or the same underlying concerns that fuel that phenomena are also driving interest rates down, because interest rates are based on the sale of mortgage-backed securities, or bonds, and those are considered longer-term, safer investments as opposed to something like stocks. So when the economy's good, everybody's investing in those stocks. They want those higher returns. When there are some concerns, you see investors pulling their money out of stocks. That's why stock prices are going down, and you see those bonds getting a lot of that flight to quality, and that's including 30-year mortgage bonds, which lenders want to fill up those coupons and sell those mortgage bonds, so they lower rates accordingly to be able to do that. And so that's what's going on. That's why we have that opportunity now, and it's a good one. So I encourage you to look further into this, or people that you know, whether they're, again, are existing homeowners or prospective homeowners. But I look forward to giving you another update soon, and I hope you have a terrific week and weekend.